Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Whoa, we've got the markets not even rocking. They're not even rolling. They be stuck up, limit up. 25.82. Can you believe it? Remember just a few short days ago, we said the ABCD was around 25.45, 25.49, I think is what I think Peak D put in there or something like that. We were looking 25.50. We got as low as 23.80 last night. If you'll notice here, I'm going to bring this up. I posted the FTSE and the DAX, and you can see the massive rally that we've had there last night. They're also limit up, I believe, or maybe not. I shouldn't say that because I don't really know. But we'll be coming off limit here very, very shortly, so we'll keep a close eye on that as we look at it. Here is what I would like to show you. Oh, but before I do that, I'll get this chart up so you guys can poke holes in it while we get ready to talk here. Yes, I know someone was long overnight. Mr. Hugard was long overnight, and I'll show you what I'm thinking. I mean, I had a rough idea when it was going to go limit up. Here's what we've done since the high way back on February the 19th. We had a big break, if you remember. We rallied up to a 50% retracement at 31.50. From that level, we came screaming down over the next 7 days. We went all the way down to 23.80. You'll notice the ABCD pattern that is there. It's a perfect ABCD, but the CD leg is it's not CD. It is a ratio of CD. In other words, the CD leg is 1.414 of the AB leg, and that is due to the steepness of the decline. That is calculated by taking the 200-day moving average divided by the square root of the 400-day moving average, and then taking the MACD and dividing it by the square root of the RSI, and that'll give you that number down there at 23.80. You'll notice that the rally that we had from February 29th low to the rally into March 3rd. That's when the Fed came in, of course, and dropped the interest rates. When we hit 31.40, you'll notice that rally was a 50% rally. Now, if you see the same type of rally occurring now, and then in other words, if the market would repeat itself, that's going to take us to 26.90. That's 100 handles higher than where we closed, and maybe we open limit up again. I don't know. If we close higher, if we get higher than 2,700 today, there's a chance that we could get a rally all the way back to 29.50. But boys and girls, if you think this is the start of a new bull market, boy, do I have news for you. By the way, there was a very interesting human interest story here in Tucson yesterday. About 4 or 5 months ago, one of our famous ranchers passed away, and his widow had to hire somebody to run the ranch because they had about 3,000 head of cattle. And so she went into, the town of Bisbee, which is where the ranching area is here in Arizona, and she tried to find someone. And the only two choices she had was the town drunk, who was the best drover in the whole area. But the problem was he was very unreliable, and he drank all the time. And her other choice was there was a gentleman who had been trained in a college to how to be a ranch hand and how to be a drover. The problem was he happened to be gay. And so she figured, well, the best thing I can do is, go with the guy that's more reliable, which would be the gay guy. So she hired him, and it's in the news last night that they'd been going on for just absolutely 3 months, spectacular. The ranch had improved. Everything was going great. And so she decided to give him a night off. And so he went into Tucson, and it was on Saturday night. And by golly, about 2:30 in the morning, he's not there. And she's waiting for him. And finally he gets back in, and she's standing there by the fireplace, sipping a glass of wine, and she says to him, "Come over here." She walks over, and he says, "Take off my blouse." He takes off the blouse. He says, "Take off my skirt." Takes off my skirt. He says, "Take off my earrings." He Takes off the earrings. She says, if you ever go into town again in my clothes, you're fired. So just remember, folks, what you always see is not what you always get. All right, that's what we have for today. I've got a couple others, but Tommy said I can only do one a month, and this is it. Let's move on here to look at something else. Folks, nothing's really changed. We're just having some wild markets, baby. Let me show you. I showed you that picture of the S&P on a shorter-term basis, but yesterday afternoon, I got this from my very good friend over in the UK, and I'm not going to get over here. You'll see this is the E-mini. This is the gentleman that I do all the stuff with quite a bit. I met him 12 years ago. I go over every year to visit with him for a week, and he's the one that does all the work on the geometry and stuff. This is a very simple chart that he sent me. The one that I wanted to send to show you, he asked me not to post it because it had things in there that you wouldn't understand and probably wouldn't believe even if you did it. But this is just a simple Andrews lines. That's all they are. Just going back to the 08 high down to the 09 low, and you can see the perfect symmetry in the market. I mean, if you think the market is not perfect, folks, you ought to really study some of this stuff, because look where we stopped. We stopped exactly at that line yesterday. I mean, you can't make this stuff up. And so the key to this is when we go below that line, and we will, that's when the fat lady will have her full orchestra in vogue, and that's what we're paying attention to. So let's keep in mind that we'll be looking at that somewhere down into the future. I had a couple of guest plans planned for today, but they all passed because they said they were afraid to say anything because it would probably be wrong. Tom was buying the market last night down around the actually it was down about 80 points, and as soon as it got to be unchanged, that was around 20. I think it was around 24.30, 24.50, somewhere in that ballpark. That's when he reversed and went long, and he's long into this limit up move, so he's done pretty good with that. But there's a couple other really big things happened last night, folks. Let me share them with you, because I think, I'm just a technician, but I see some of these things, and they make a lot of sense. Here's where we were last night in the treasury bonds. Just get this up here. This was one of the reasons maybe the rally started. You'll notice that the low last night in the bonds came in at 72.08. Folks, that was an exact, to the tick, 61% retracement from the low on February the 6th. It's right there. You can see it. This market went from 160 to 192. It dropped $20,000 in 3 days. And now we're trading up and around near the 179 level. So this is why it's so very important. What the Fed did yesterday, from my perspective of looking at this, is that good job, Dennis. Is that they threw everything they had at it. They threw $500 billion. I know they can do a lot more, but you can see how the market reacted to it. If you think this virus thing is over, folks, it's not. 877-927-6648. Keep those cards and letters coming in.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to put up a chart here. This is just a 4-minute chart. It gives me the last couple days to see what's going on. You'll notice we had that bottom down there. I've already showed you that bottom was a combination of a 1.618 expansion of the move from March 12th, that big move where we went from 2480 all the way up to 2660, 80 handles, and then back down again, 100 handles. That's really easy to figure out, isn't it? And there's your 2380, and that tells us that the market should open or get as high as 2635. Now, if we get higher than 2635, that means that possibly this thing could have a little bit more of a bounce. What they're doing now in the news, that we might even have Tom to call in. God bless him. Yes, he's going to try to call in here, and we will hopefully get him on the line. Al, let me know. I know this is on the spur of the moment, Al, but if Tom calls in, please give me a heads up, and we can chat with him about his state of mind as he's looking at these here, because we're going to be coming in here. Maybe that's him right now. Okay, he's going to let us know just as soon as he calls in. But make no mistake, folks, there's somebody out there that wants to say hello, and I thought I would let him come in here and let you take a look at him. Well, oh my goodness, it's one of my neighbors here up in the mountains right behind us. This is still a bear market. We've had a tremendous break. I mean, you can see anybody that thinks that wasn't folks, the limit up, limit down stuff, that used to be common occurrence, because the limits that we're seeing now, these are monster limits. You're talking about big time serious money. We used to have limits in the commodity markets to be $2,000-$3,000 at the most. We're talking $10,000-$20,000 of those. Who knows? That's my ex-wife, Marshall. Anyway, let's actually, she doesn't look quite that good. If we look at what's happening with these markets, you're seeing extreme fear, okay? And you see it yesterday was there, and now what? The fear is gone today. They're talking about, oh, yes, it's manageable, and as long as you're not old like me, you're going to be probably okay, and there will be some more deaths and stuff. But do you think this thing is stopped? I don't think that's the case, so we'll see what's happening. Italy is still effectively shut down. I have several students over there that I've been in contact with, and the only thing that is open in the whole city are the pharmacies pharmacies and the hospitals and stuff. So we're going to find out more about it as we get through. Luckily, it's not as virulent as SARS, where so many people were dying. But I was with my doctor yesterday for my annual physical, and he took me into his office and showed me a special fax machine he has from the CDC. He gets 2 things a day, all about the virus and stuff. And then he basically said what it said to him was, get ready. In 2 weeks, he says, you're going to be very busy. So they are expecting a deluge here in Arizona, which is relatively warm weather, which is not a good sign, but we'll be able to see. The other thing is that the people that do this is the children will be like the little culture tubes. That's the one. Yes, he can get the test kits easily. He's had one gentleman that he had sent to the hospital, but he was tested negative. He just had a bad cold, but he hasn't seen any of that. He's got a very busy practice. I mean, he's got like 12 girls in there working with 2 other doctors, so it's a pretty big practice. And he's actually trained at the University of Michigan. So anyway. That's neither here nor there. He said I looked really good for somebody 144, so that's good. We've got Mr. Tom Hugard on the line. Trader Tom, you are a legend, my friend. They were talking about you buying those stocks down last night when the whole world was selling. Tell us why you did that, Tom.
Oh, I think it was you that told me to do it.
No, get out of here. No, I did not. Go ahead. Go ahead, Tom.
I don't know how to answer that. You stare at charts for 20 years of your life, and then no, actually, I do know. So let me let the cat out of the bag. Of course, it's luck. I'm not going to make myself into something I am not. But I studied the chart from the 1918 to 1921 Spanish flu virus. And well, you have to remember that 100 years ago, we didn't have internet. We didn't have mobile phones. We didn't. I don't even if we had phones. We probably did. But so everything that we witnessed in 1918, 1919, this was the aftermath of the Great War, First World War, and soldiers that had come to Europe to fight, they came back to U.S., Canada, and so the infection rate was much slower. But after the war was over, the Dow Jones went on an epic rally, and I think it peaked at 117, and that's when it turned because I believe the Spanish flu began to take its toll, and it declined 45% from top to low. And this took approximately, I think I calculated to be 30 months, give or take. And then I looked at some of the European indices, and they had fallen 35% in a week to 2 weeks. And I was thinking, sure, I'm taking a chance here, but I just wonder if it isn't about time that, if anything, on a Friday. You see, what was significant was that that if you are to have a bounce, it very often comes 1 week later after the market has been decimated, and we got decimated last Friday, and I just had this feeling that we could actually end the week on a high note, and it was just me trying to look a little bit ahead of, well, what are people thinking? Will some people want to go short into the weekend, or do they want to go long into the weekend? Do they want to cover their short positions? And I came to the conclusion that I thought that there's a lot of short positions out in the market, and I just wondered if it wasn't about that time where they perhaps were beginning to look to take profits. It's a bit of I don't have a Fibonacci technique to put my hands on, Larry, or my finger on it. It was more trying to think what other people would be thinking. I mean, that's the game. That's what John Maynard Keynes once said about finance and speculation. He said, we're not in the game of guessing what the market will do. We're in the game of guessing what other people will be guessing and thinking, and that's kind of, I know it doesn't sound overly scientific. I apologize.
No, that's exactly what we like to hear, is to get inside your head. So you didn't use the 200-day moving average on this?
No, I coincidentally I didn't. Not that one. Not this time. Usually that's my right hand man. That 200-day moving average. I use it for everything, but not yesterday.
Okay. Hey, Tom, thanks for joining us, my friend. And we'll please, when you talk to David, ask him to give me a call. I'd like to have him on again, too, if we could. So have a great trading day. Have a wonderful weekend, and we'll have you on soon, okay?
Thanks a lot. Take care.
Thank you.
Bye-bye.
Thanks for being on. Yeah, Trader Tom,
you.
folks. We'll see what's happening here, and we will be going on. By the way, he has an order to sell when it opens, so he will be getting out of his longs there, and he said he's going to be reversing, and we'll see where he does that reversing. My guess it'll be somewhere around 26.35. Who knows? I have to wait and see here what's going on. We're going to take a little break, and we'll be right back with our next guest, which will be Ben Bernanke, as soon as we get him on the line. We're dialing for him now. The problem is we don't have his right phone number. 877-927-6648. Keep those cards and letters coming in.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the flag is up and down the stretch they come. So far, the S&P has rallied up to 26.15, 26.07 last. We're looking at 23.75 as a potential place to maybe nibble at the short side, folks. Nothing has changed, and these markets are just jumping around They're doing exactly the same thing they've done over the last few days. We've been following them since Monday. They have not done anything different on any single day. Every single major rally has been a 382 retracement. So pay attention to those. They don't happen often, but when they do, and when they do, those are the ones that are very, very important. The gold market has had a pretty good rally off the bottom we had at 15.50, and we got all the way up to 15.98, a nice $50 rally in typical ABCD format, and we're now trading $10 lower at 15.89. So I posted the chart of the Japanese yen on the 60-minute chart. This is one that we were watching, and then last night, using the patterns that we usually use in the euro, that we had suspect that the euro had made a major top up in here, and we put out a recommended sell at 112.20, and we're now trading 150 pips lower than that right now, and that one is working pretty well, and we're almost there, boys and girls. We've got to, we're almost, did we get there, Bubba? Let's just see where we is. Well, by golly, Gomer, we hit 25.24. We were looking 23.75, maybe 26. It'll certainly go higher than that. So far, the high has been 26.24. The number was 23.75, and now we're at 26.16. So we're going to see what happens. At least I was right once this month, and maybe for only 10 seconds, which will probably be a long time. Let's move on here to the rest of these to pay attention to that. So we'll pay a little bit of attention, and we'll see what's going on. We're having great swings. You can't ask for anything more than that in these markets. The one thing about the patterns, folks, is they do have some degree of predictability, but frankly, their real value lies in the risk control. And that's why I think it's so very, very important to, pay attention to that. That's the real key, to really watch as we look at some of these things unfold. Someone's asked a question about the platinum. Folks, we've had a huge move in platinum. I sent out a special video on the platinum, gold, and silver last night because the platinum had that big break. We were expecting the big break to come in platinum, and we did get that break. It was well over $100 an ounce. And yesterday, with the rest of the market moving, and we'll see if the thing is going to get down here. Hold on one second here. Move this over just a little bit so you'll be able to see the platinum. We're up about $50 an ounce after dropping 112 yesterday. So we'll get this up here. You'll see there's the big move down in platinum. The key there, folks, if you'll look where the 618 is there in February, we have the nice rally up around 1,020 per ounce, and then in one day we drop $60 an ounce and take that out. That's like what we did in the S&P last Friday. And so that's what led to that. Now, we're getting pretty close to a good bounce in here. I think that's all you're going to get. Silver, of course, we've already talked about that. That's around $15 an ounce. If we get there, we'll see if that means very much at all. And we'll do, one thing is every time, whoa, look at this. Now this S&P is at 25.96. Well, by golly, Gomer, you got lucky. Shut the front door and raise the rent. All right, let's move on, and let's see what else we got here. Someone else. The Japanese yen. That number on the Japanese yen comes in at 93. So watch that one, relatively closely, and then you'll be able to see whether that is going to help some of this stuff. So we'll move on. I think we've made a major top in Treasury bonds. Having a swing like we've had this week certainly tells us that something really big has happened, of course. And if we pay attention to that, you'll notice that we'll be able to, hold on a second, I have to do something for Tom here, and then I'll be done here in just a second. Hold on, I'm very sorry. Oh, any callers coming? No callers coming in today. Shut the front door. What are we going to do here? Okay, wow, this is really a wild market, folks. We've already dropped 300 points in the Dow Jones. I mean, my God. This is getting too hard for me even. Holy cow. Oh, dear. Just a second here. I promised to do something else. Here, someone's asking a question about one of the commodities that we follow, and that is the cattle. Cattle have been decimated, folks, like just everything else. Now, if this is truly a bottom of some sorts in these things, which I highly doubt, as a matter of fact, let's pose a hypothetical question. How about like these other rallies that we've had here in the market? Let's just this is probably not going to happen, but let's say that, just a second here, folks. Let's say they get this up here so we can see it. Just get this up here, and we'll be able to get this up here. What if these other rallies, like we had back in early March, is no different than the one we've had yesterday and today? What if it makes a new low now from that level? What's that going to mean? That's not going to be very good. But it's a Friday, okay, and it's a down week. So the only people that are going to be covering are the shorts, is my opinion, of course. Oh, one other thing, very, very important. Shut the front door, Larry. Just a minute. Just a second. It's really important. Open interest. Let's take a look at this, okay? Here's open interest on the E-mini S&P. I couldn't do all of them because I can't fit them on the thing. I wanted to be able to do the I'll do the big ones, though. But you'll see the E-mini S&P futures. You see we're up to 3.8 million, folks. Big increase, a 9% increase in open interest yesterday with the market down big. I mean, that's new players coming in. Look at the open interest in the NASDAQ, a 9% increase in the open interest. I mean, really big open interest. So, and if you'll take a look here, where is that? I can't get that other one in there. I can't. Well, I couldn't get the Dow Jones. That's insignificant up there. So, but those are big. That means a lot. Now, hey, maybe this is a major bottom, folks. If we go above 26,024 now, is a chance. All right, it's going to be a real bottom. That's really what we're looking at. So we'll see. The euro, Bill, I've been, if you listened to the videos last night, extremely bearish in the euro. We had a very, very nice pattern line up in the euro. Unfortunately, I don't have the chart in front of me right now, and I just don't have time to bring it up. But it's related to that. It's the upside down version of this Japanese yen chart that we're paying attention to. So we'll keep a sort of a close eye on it and see whether that's going to mean anything or not. And we'll go, oh, here it is. Just a second. From the minds of men. Okay. Well, it's the one thing you want. One thing about the stock guys, they open and they get to be able to pay. Let me double check some of these prices just to see where we are. Okay. All right. We're trading at 25.90 in the S&P. If this S&P better hold 25.80, because if we start getting below limit up, that's going to be a very bad sign. So let's watch that. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we've already taken a look at, oh my goodness, the S&P's dropped 70 points. Shut the front door. This is not very good for the bull side. Let's take a look here at the silver for Mike. I think that the, get this silver up here and we'll take a quick look at it. You'll be able to see here. Oh dear, this is not looking good today. Not looking good. Just a second. It'll be okay, though. Just not the end of the world. Let's get this up here, and we'll take a quick look. Here's, folks, you know, as you know, we've been bearish, silver and gold. Well, gold when it hit 1,700. One of these days, I'll share with you why that number was so important by using some of the techniques that I've learned from John Jameson on standard deviations, because it's really good. In fact, I've just finished my futures traders manual that I'll be talking to you folks about here in the next couple of weeks or days, because it's really got some good stuff in it regarding the opening price. It also has a trading system for the euro that actually works, and you'll be able to see how it works. And that was one of the reasons why we got short that euro last night at 122.20. And you'll notice here that in the silver, you'll see the ABCD structure that we have there. That tells us that we are looking at around $15. You'll notice that 1.618 blue line down there right below point D. That's where I would be looking at it. That would be breaking $15. That's going to act like a magical number, which the heck it isn't. So far we've held the 78% level, which is really good. That came in at 1542. The low was 1528. We're trading at 1562. But you can see the bounce here is virtually nothing. Gold rallies $5,000. And we can't even get a $750 move in the silver, so that's not a very good sign. So I still think we're heading lower. I'd say $14.99 is where I'd be looking to, look at silver potentially. I've always said buying those silver rounds around $13, $14 was, equivalent to buying a Picasso and putting it away. Those are beautiful coins with the eagles that you just can't beat. Or if you can get the original Morgan silver dollars or Peace silver dollars, those only cost usually $1 over spot. Those are always good, and they're hundreds of years old. So those are very, very good to take a look, watch with. So we'll see how these things are going to unfold here. Okay, let's take a look here at the gold. My goodness, we've broken from 1598 all the way down to 1578. Let me show you what I was looking at in the gold last night, folks. I don't know if these things make a whole lot of sense to you, but this was the AI program that we use, and you'll see here that we had a situation that it looked like the gold should start down at around 9 o'clock. You can see the really nice ABCD pattern up there at 1598, which also had to be a really nice retracement number. We were up $48 from the low at 1550, and you can see here 1585. We're trading at 1570 something and change right now, which is actually working okay. So we'll see how these things end up over the period of time that we're watching these things. Now, I have a question about the soybeans. Oh, regarding the soybeans and all these things. We're not; those people are not going to stop eating and stuff, and some of this political stuff may make hunker down. I don't know, but folks, this is the beginning of a very, very important event, and the reason why is because it's mathematically certain that it is going to affect us for at least 4 to 6 months. The mathematics behind it, you can just see what's happening. You know, Shane Smolian came on and talked about this about a week ago, what was going to happen, and that's exactly what's been happening. So I think it's important that we pay very, very close attention to that, because as we look at some of these things, let me see if I can get his latest prediction that he had up for us today. And shut the front door. I don't think I can. No. Wait a minute. This is... no, I can't get it up here. He'll probably send it to me again. But it shows that we're going to, we're at 120,000. We're going to be at 1.2 million probably in a couple of weeks, and then that's going to be a watershed event. And then as more and more people pass away, that'll be in the thing. But this is just getting started, and it's not going to get over right away. The problem is the people that are just barely hanging on, the guys that, work for a living as waiters, vendors, people that work as in transportation industry. That there is no more transportation industry pretty much for travel right now, and that's going to go on for a while. So that's all going to take a big toll on us. And these rallies that we have are a chance to really get in there and see whether we're short or not. Most of this occurred, start of this, of what they're talking about here. I just want to get this to your attention here. You'll notice here, this is the Aramco IPO that came out. We had a beautiful Gartley. You can see the ABCD pattern. You can see where the Aramco IPO came out. We had a little bit of a rally, and then bada bing, bada boom. Boy, we see this so many times in these IPOs, It's something about empty your pockets. Anybody will be able to see. And a lot of these things are, how let me ask you a question. How's an NBA player going to work from home? How's a New York Yankee going to work from home? You can't do that. I mean, a lot of people can't. They have, how else are we going to get these supplies? I mean, give me a break. By the way, the situation in Hong Kong is getting a little bit better. They're worried more about the terrorists over there than they are the virus, but the virus is still a problem. So this is going to be with us for a while, and that will be able to, we'll get through this without too much trouble. So at least one of our patterns worked today in that S&P. So that was a combination of where preparation meets opportunity. That's also known as luck. So we'll see what's going on with that. Okay, now let's move on to another question that someone had, and that is about the corn. Folks, I still think the corn's going to be okay, but I'm really not too much interested in it right now, but we will be following it very, very closely here, because I think that we're going to have a really good bottoming action here in the corn. We've had this nice sell-off this week, and we'll be watching it really closely down here at around this 370 level. We'll keep a look at it. And believe me, when you listen in the news, keep all that stuff with a grain of salt, because the news that comes out and all of these things, you just can't trust it, folks. We see it time and time again. That we've seen it because we have Sarah has family in Hong Kong, and we have many, many friends. What they're telling us and what's in the news is like 100% different. It's like different. Same thing in China. I mean, I have many friends in China because I spoke at 13 major universities over a 10-year period, and so I made a lot of relationships with professors and things that that I really have kept up, and it's not what they're saying. Canada, the Chinese are not bad people. Give me a break. You hear that. Well, maybe I'm wrong about that too. I'm wrong about a lot of things. So we'll see. Oh, we got a break coming up here. Saved by the bell again. We'll have to meet. Yeah. Anyway, let's move on to. I happen to be married to a Chinese, Terry. So she's sitting here with a sharp knife right at my jugular vein, making me sell that. What else do you want me to read, dear? That they're lovely people. Okay. Yes, dear. We'll do that. Okay. All right. We'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey folks, I want to leave you with this chart from my good friend Ala over in the UK. I've met him 15 years ago. He became my student. Met him at Tom Hugard and I were given a seminar, and he came up to me and he said, I'd like to come to Tucson, spend a couple days. He ended up spending a whole week with me. From that point on, we became very, very dear friends, and he invites Sarah and I to his home in Europe, in London, actually outside of London, every year, and we always spend at least 5 or 6 days with him, and he is a true genius of the market. What this chart is just like a 1% tip of the iceberg of the type of work he does with geometria, and he is very, very important. This low that we made last night at 2380 in the S&P. If we go below that today, folks, you do not want to be long stocks over the weekend or whatever, because this is the big casino, folks. And if you don't believe that, you'll believe it in a few weeks, maybe less. I don't know. We'll see. And if we make a new high from here, my old partner, Walter, out there, my old trusty old Burrow, he and I will be moving on into the sunset, because this is it. This is where the fat lady has started to sing. The violins are playing. The basses are up, and we're going to see up, and away. Hey, by the way, I have to be right on my final yacht trip. When my days are over, and then we'll see how things really go. So it's going to be real interesting to see what's happening. So we'll have a very good, interesting thing here. So, all right, let's move on here. Got the end of the show coming up. We'll see you on the flip side on Monday, God willing, and live every day in an attitude of gratitude, and may God bless. And folks, please do something nice for someone that doesn't have a whole lot, because believe me, there's a lot of people out there that are struggling, and they do need a lot of help. And don't forget my GoFundMe page, and we'll also donate all that money to my favorite charity, the Church of What's Happening Now, baby. And we will see you all on Monday.